Hi traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back, and we're going to get started with the morning analysis. The market's obviously pretty quiet at the moment, and just not a lot happening at this time, but that's all right. That's ahead of the non-farm payroll, and you would expect as much. All right, so let's start with the euro dollar, and let's get that analysis out of the way. So I'm going to take a step back for a moment, just to give you a little longer term view of the euro. Okay, so we are looking at these very equal moves that we get in the euro, and you see there's a lot of reasons why we stalled here. Okay, now obviously if you look at long term analysis here, that that we have a big flag pattern in play, and if people have been short-sighted enough not to see this flag pattern developing, you got to be real careful, because a lot of people have been calling major dollar top, and the dollar is going to pull back, and real big bears the dollar. When you have a big drop like this, and you have a very shallow retracement, which in this case was a 38% retracement, not even a 38% retracement. I mean, when we spiked up there to 117, it was barely even sustain that. When you have a very shallow retracement, that is the biggest signal out there that you're going to get a continuation pattern. So if you can't even do a 38% retracement, you fall short of that. That means that we're probably going to continue. Okay, once you get up to like a 50% or a 618, then the continuation part of it, then the continuation here becomes questionable. Okay, but when it's a very shallow retracement like that, chances of a follow through are quite high. All right, so what does that mean? Well, that means the dollar has the potential to really explode higher, okay, over time. And if anybody's been short-sighted enough to see that, you got to be real careful in their analysis. It's something that's pretty basic as far as technical analysis goes. All right. Let's go over to the intraday. So, I got asked a couple weeks ago when we broke through here, where's my target in the euro dollar, on the way down. I said, well, 108.10 to 107.20 initially. Why did I come up with 108, 10 or 108.20, I think is what I said, but I just wasn't looking at the numbers correctly. But there's support, which is 108.10, okay? And then 107.20 is like the 786, or 107.40 is the 786 retracement right through here. So this area is where I did expect the euro to come down on this leg lower. We got pretty damn close. We're obviously we found some buyers ahead of 108. I mean, it's extreme. It's obviously horizontal support through here, so you're going to get some people trying to cover up some shorts ahead of that. Now, the thing is if you look at you narrow that into a more intraday. This right here, this is another example of a very shallow retracement. You guys see this? See, the problem is I don't think I'm the only one right now thinking the dollar's gone too far, and that the dollar can't, dollar really needs to bounce or pull back a little bit, right? Am I the only one that thinks that? No, everybody thinks that. Everybody thinks, oh, this dollar's, it's been such a big rally this week. Of course, it's gone too far. It's got to pull back, right? It's gotta. No, it doesn't. We get a strong number. We're going to see that 107.40 probably pretty quick, right? Right? I mean, if we have a strong number, the market's going to go holy shishkamanga and say, my God, we're going to get an. I mean, look, didn't you just hear me just say the same thing about the monthly charts? Didn't I just say the exact same thing about the monthly charts? On a move lower, if it's a shallow retracement, you know, on a shallow retracement, chances of a follow through are pretty high, right? Didn't I just say that? We were looking at a monthly chart going, oh yeah, yeah, well, look, this is a 4-hour chart. So if you're out there going, oh, I'm going to buy the euro because it's oversold, or I'm going to short the dollar because it's overbought, better be careful. I'm not putting my money where my mouth is either. I've got a hedge. I'm just as worried as you are about the dollar pulling back. But let's call a spade a spade. That euro's weak, right? Oh, pumpkin spice coffee always gets me. Okay. All right. So with that being said, I'm hoping. I'm gonna delete this really quick. I don't want to stick that in your head like, oh, that's. Look, we have really key support at 108. It's horizontal support. Comes through here all the way back to summer. So you got end of May, you got July. That all comes in at 108.10. Okay, that's really key support today. We get a foothold below that. Yeah, I don't think I'd want to be long the euro. Okay, and frankly, I'm just telling you this right now that I'm buying the dollar on pullbacks. I'm not shorting the dollar. The dollar yen is my only. Most of you know this. The dollar yen is the only dollar pair that I'm actively shorting. Okay, I don't really short the dollar. I'm very bullish the dollar. The dollar yen is on its own program. The dollar yen sings to its own tune. It has more to do with risk appetite and risk aversion. So when I short the dollar, it's predominantly 90% of the time it's through the dollar yen. Okay. But yeah, trying to buy the euro, like for me to hang on, it's something that unless I'm doing it intraday, I'm not going to do it very often. Okay. Anyway, so 108.10, major support here. Resistance now. Well, let's imagine that we get a little bit of a bad number or an inline. If that happens, the euro is going to bounce, and I'm hoping over the next couple of days we can bounce back towards 110. That's my hope. I would really prefer it not to happen all in one day. Okay, if we get to 110 today, first question I'm gonna ask is, holy cow, how we bounced 130 pips? Why did we bounce 130 pips? Do I really want to stand in the way of a currency that just bounced 130 pips in a downtrend? Probably not. So I'm hoping we go there by like Monday or Tuesday. If we get there today, like I said, there's a reason that it went up there today, and I probably don't want to be short. But let's talk about some potential here. So if we do get like a pullback, maybe a move back to 109.43 at this point would be previous. Well, it would be 50% retracement. You can see some previous support through here that comes in around 109.40. So 109.40 would probably be a nice resistance if we get up there today, that I wouldn't mind nibbling at even intraday. Like if we got a spike up there, let's just say that the data is not bad, but it's not great. So let's say we create 170,000 jobs. Unemployment rate is still 5.1%. It didn't drop to 5% as analysts are expecting. Well, if that happens, the euro could push back up to 109.40, and if it does, I might actually short a little there, with the intention of selling more at 110, next week. But we'll see. We'll see actually following the jobs report. Okay, let's go over to the cable. Cable's toast. So, and I'm going to tell you right now, unless the pound miraculously closes the day above 152, which I'd say the chances of that happening right now is less than 20%. But if it closes the day above 152, we'll have a false breakdown, big hammer, and I'm going to turn around and go long. Okay? But right now, we're taking out a pretty big trend line coming out of a triangle. Minimum expectations right now are, you know, you're talking 148.20. Maximum expectations of this wedge takes us down to like 144. So right now it's bearish, and like I said, unless we pull out a massive hammer in the cable, and I can't even see that happening. Why can't I see that happening? Because the pound's falling for a reason. If there's anything that moves the currency market, it's interest rate expectations, right? You say, oh well, inflation's doing this, and manufacturing doing that, and blah blah blah, sentiment's doing this, and yeah, scrap all that. Interest rates and interest rate expectations are the primary driver of currencies. You always remember that, and it's always like something that should be in the back of your head at all times. So if interest rate expectations have shifted dramatically with the Bank of England, there's a reason why the cable's breaking down. So the chances of the pound actually reversing today are quite slim, even if it's a bad jobs number. So realistically, I can't see the pound completely reversing. And like I said, even if it does, I think I'd buy the pound, but then I have to go back and say, well, why was the pound going down in the first place? So it kind of contradicts what I'm saying. And then I'd probably say, nah, I don't think I'm gonna get long the pound anyway. I don't care if there's a hammer or not. But the pound's bearish, and any move back up to 152 is, you're gonna find sellers there. There's no doubt about it. So because let's say it's a mediocre number, okay? Let's say it's a mediocre number and the dollar pulls back, people are going to be looking to get out of the cable anyway. So if the cable bounces back to 152, you're going to get people, like me that bought it yesterday that didn't get stopped out. I got stopped out, but anybody that didn't get stopped out, they're going to be like, thank God we got back to 152. I could not wait to get out of that, So anyway. Let's go over to where's support now. Okay, well, let's try to figure that out because I don't know. 150.85. Okay, can you see that happening? I can. Because the cable's a mother son of a skunk, Don't you see it just taking all those stops below there? And then bouncing, yeah. So 150.85, 150.85 should 161% extension. That should hold it. We might probe it a little, but that thing's so heavy. Sorry, didn't mean to yawn on you. Sorry about that. Let's go over to the Swissy. The Swissy. It's a Swissy, you see. We're all trading this Swissy. All right, so here's the Swissy, and so everybody knows why I'm bullish the Swissy. We've taken out a trend line that spawns back from 2001. Then the one from 2004 has been taken out. 2003. That one's been taken out this week. And yeah, if we get a lift above parity, I'm adding. So just everybody should know that. And anybody who's listening here for the last several weeks, my cost average is 98. My cost average is 98.21 right now, and I've been long this thing for a while, and I will continue to add on the way up because I think the Swissy is the most unattractive currency on the face of the planet, thanks to the Swiss National Bank. They have not only do they have, not only the rates are at ZERP, but they're below ZERP, and they will take your principal for parking your money in Swiss francs. So yeah, hey, thanks for parking your money over at the Swiss National Bank. I will go ahead and take some of your principal because you left it here. Thank you. No institution wants that. It's none. Yeah, it's bad enough being at ZERP, but being below ZERP, yeah. Okay, so we came, tested breakout point perfectly at 98.50, and we're just grinding higher. So above parity, things get a little bullish here. Okay, major resistance today. Whoops. Okay. Dips in the Swissy. So where would we see now the risk the Swiss has, obviously, the risk the Swiss has is that you get some risk aversion because people don't mind parking their money with the Swiss National Bank. They don't mind parking their money at the Swiss National Bank if it's only for a week. They don't mind buying Swiss francs if it's only for a couple, 3 weeks or a month. They'll buy it near term. They just won't hang on to it. Okay. So you're welcome, Mark. Have a great afternoon. You're welcome. So anyway, so if we get some risk aversion, obviously the Swiss franc the dollar Swiss can go down. Okay. That's not a, that so if you look at the dollar Swiss, you can't look at it and say, well, it's always going to go up because of the Swiss National Bank. No, of course not. Any type of risk aversion will spur short-term Swiss buying. But even when the Dow was down 1,000 points, remember that? The Dow was down 1,000 points, the dollar Swiss went, phew, and then V bottom, phew, right back because no one wants to hold it. Like, yeah, I bought Swiss francs for a couple of days because I thought the big one was coming, right? It's the big one. Dow's going to drop 8,000 points. Oh, okay. The Dow just dropped 1,000 points. Get me the hell out of that Swiss franc again. Okay, so the downside just doesn't last. But not saying that it can't come because, like I said, if the stock market dropped 300 points a day, I can pretty much guarantee you the dollar Swiss is going to go down, right? That would be a natural evolution of the stock market dropping 300 points. But if the Dow drops 50 points, maybe even 80, 100, no one's going to worry too much about the dollar Swiss. Okay, so where's support today? I guess support would be right here. I'll go to an hourly. We're sitting on support right now, but I would say support's really right through here. So any dip down to 99.25 probably be very well supported today. 0.9925. Ah, shoot, I gotta really get through this analysis for running short on time. Okay, here's dollar yen. I do have a short in the dollar yen. I'm looking at Paul Franco pointed out perfectly from the absolute highs to the low. 618 comes in at 122.10, 122.15, somewhere around that. So expect the dollar yen to stop at 122.10. That's key resistance to 618. It's the golden fib. We are in a big range in the dollar yen. Support is obvious because it held last night. So, and you can actually do this same thing as the Swissy, right? Right. So support here is going to be really key. See how the 4-hour wicks right there? That all comes in at 121.60 too, actually, but 121.60, that is support. So as long as we're above 121.60, it's trending intraday higher. Again, I'm short the dollar yen as a hedge. Okay, because I'm long the dollar Swiss, I'm short the dollar yen just as a hedge because they should move together today on strong or weak data. Let's go over to the Canadian. Okay, so here's your dollar Canadian. We drew this out yesterday. I just deleted it, but now I'm going to say this about the Canadian because we do have Canadian employment today. It looks something like this, right? So the data out of Canada is expected, Canada is expected to create like close to 10,000 jobs. And like I said yesterday, I always try to be sensitive to my Canadian friends because I love Canada. I've been there 2 dozen times. I love the people, love the cities, I love the mountains, I love Canada, I love the maple syrup. But I'll tell you what, I do not love their currency. Not saying that I don't think I just think the Canadian currency is going to get walloped. I think the Canadian economy is going to suffer, and it's going to suffer a little bit, probably for the foreseeable future. Weak crude oil prices, persistently weak crude oil prices, is going to weigh on the Canadian economy a lot more than Prime Minister however you pronounce his name thinks. I think that the Canadian people hired a new prime minister to, try to combat, you know, something that's beyond their control. Okay, it's a problem with being a resource-rich country is when the resource that you have is resourceful. Everywhere else, it's not so. It's not such a precious resource anymore, right? So I believe that the Canadian data is going to start to weaken significantly in the coming months. I don't know if it's going to really start this month or next month, but I'm fearful for the Canadian economy that it's going to start to slow down. And so, we're expected out of Canada to create 10,000 jobs. I think the market's already looking at it saying, yeah, that ain't going to happen. All right. So anyway, this this move in the Canadian currency doesn't surprise me, and I think that I think the dollar Canadian. If you guys don't know my longer term targets on the dollar Canadian, because I've erased them all, that's a big cup and handle pattern, and it points to about 150. Just so you guys know, this right here, this longer term monthly chart. You guys are Canadian and you're going, oh man, what do I do with my Canadian currency? It's probably going to weaken. But remember, this is good for Canada. A weaker Canadian currency is good for the Canadian exports. We are your biggest trading partner here in the United States. And why the hell can I grab that damn line? Let me grab this and do it this way. So, when that's basically what the cup and handle points to, right? It's it's going up to here. This distance from here to here is the same distance from here to there. So that's going to be, ultimately, that's going to be great for Canada. Manufacturing in Canada is going to flourish as a result, which is great. It's going to be for the people that like to come down to North America to spend their money. Not going to be so good. I live in Phoenix. 3 years ago, one third of investors buying U.S. real estate or Arizona real estate were Canadian. I know. I have like half of my friends are in the real estate business because that's what they do in Phoenix. Trudeau, thank you, Jason. I knew that. I couldn't remember. I was like, dang it, I couldn't get Trudeau. Thank you. God, he's my age. Trudeau. Teacher. I'm really interested to see how this he's super liberal guy. I'm interested to see how he does. Anyway, all right, that's neither here nor there. I just realized what time it is. Okay, so we've got the potential for a move up to 132.75, which is going to be key resistance. Support right now is 131.50, 40, whatever the lows here are. 131.40, 132.75 key resistance, and we are in a range. I know we're in a longer term bullish trend, but as you guys know, if you've been trading the Canadian recently, we're in a pretty big range here. All right, when I come back, we will do the Aussie, Kiwi, dollar index, peso, Swedish krona, Norwegian krona. You guys do understand that days like non-farm payroll day, like today, I cannot answer all your questions. It's not because I'm ignoring you. It's just because we have a crap load of stuff going on, and I need to make sure that our analysis is rock solid ahead of the data. So again, if I ignore your questions, it's not on purpose. It's just, catch me on Monday. Monday, I pretty much answer every question that comes through. Days like non-farm payroll, I can't get to all your questions. There's no way, and I'll miss about 90% of them. So back in a few moments. Don't go anywhere. Thanks. All right, traders, this is Blake Morrow. You were listening to the Lunch Money webinar, and I had Brenda Kelly, the Chief Currency Strategist at was she at IG Bank? Or she just went over to London Capital Group. She was part of IG Bank. So it's great. It's great to have her. Great to have her come in. I'm going to probably have her on as a guest. I had mentioned it to her a couple months back. I'll probably have her as a guest one of these days coming in. Be nice to chat with her. Anyway, that was really nice of her. Let's see here. Okay, let's. Oh, Anthony. What? Wait, hold on. Before I go on, this is a really. Excuse me. This is a really good statistic. Anthony said, interesting statistic, going back to January 2007, there has not been more than 4 consecutive misses or beats on non-farm payroll. The last 4 have been misses. Wow. So that's a really good. If I was a betting man and I was walking by a roulette table and I saw it hit black 4 times. Anthony, you know where I'd be going? You know where I'd be going? Red, baby, red. I'm just kidding. Okay, that's great statistic. Thanks for sharing. Appreciate that. All right, let's go back into our analysis. We got some stuff to get through. All right, so let's go to the Kiwi. So Kiwi's hitting new highs in the day. Now the Kiwi hit, just so you all know, I have to go back and redo this so you guys can see it. Okay, so we hit 127% extension of this, not of that move, this move. Sorry, this was actually real. 127% extension. Okay, you can see why I covered up my Kiwi short. Okay, also we stopped at a 50% retracement. So that confluence really stopped me from being short anymore. And so that's why this support right through here is very, let me take this and go like that. This is really important support today. That comes in at 65.75. Just huge. Okay, so Kiwi. Now I eventually expect that to be broken. I think the RBNZ is going to be extremely dovish going into the end of the year. So I personally am looking to sell the Kiwi on a pullback. This rally here is very attractive to me. I would love to see us continue to rally back to. Now here, let me get rid of these fibs now that you know those. So any move back up here to 66.70 or so, I'm a seller. But let's figure out exactly where that price is. High to low, 38% retracement is 66.55. I might be a seller there if we can get there today. 0.6655. We are in a range environment, but I'm bearish to the Kiwi. If you guys haven't figured that out already, I'm extremely bearish to the Kiwi. All right, let's go over to Jose. Asked me, hey Blake, I'm a Canadian living in Mexico. What are your views on the Canadian versus the Mexican peso? You know what, Jose? Just because one of my really good friends is named Jose as well, but he's Jose Martinez. And he'll tell you that too. I'll be more than happy to help you, but it's probably going to have to be at the end of the webinar. So if at the end of the webinar after non-farm payroll, ask me again, please, if you don't mind, and I'll be more than happy to take a look at that pair. Let's go over to the Aussie, because I got to really get through all these majors before non-farm payroll in 25 minutes. Okay, so here's the Aussie. Nothing's changed here. Nothing. Buy it at 70.70. Sell it at 72.25, but now it's 72 cents. That's it. Okay. You let it get there. Don't trade in the middle, because if you do, you're just going to end up, getting whipped around like it's nobody's business. That's been my 2 cents in the Aussie the last couple of days. It's just don't. It's untradeable levels right now. Okay, because longer term, let's look longer term. Okay, so here's this big downtrend line, right? Okay, the downtrend line is capping the Aussie big time. Here's the daily chart. Downtrend line is capping the Aussie. Now the downtrend line below that is this one on a 4-hour chart that's right here. It comes in at 72 cents. Really, in order for the Aussie to turn bullish or to turn the big ship around, it's got to break 73 cents, just for future reference. For today, any move up to 72 cents is probably going to find some sellers. Any buyers are going to emerge down at 70 just because that is the bottom of this channel. Okay, you can see the channel here, where the lower end of the channel is going to be, however you want to draw it, it's something like this. Okay, just the lower end of the channel here comes in at 70 or so. So be long here, be short there, but don't be trading it in between here and there. Look, I made a funny, or maybe yeah, funny. I made a funny, maybe a rhyme. As a rhyme too, huh? Okay, dollar index. Dollar index key resistance 98.25. We already knew that from yesterday. 98.25. Big deal. We break that, and maybe it's 98.30. 30. I'm sorry. 98.33.35. Sorry, bad. 30.35. Then it turns. It's already bullish, but then it turns really bullish after that, because then you have your flag pattern in play. 4-hour support, same support, nothing different here. So any dip in the dollar today, like if the dollar dips, see, this is why I think any weakness is going to be just short-lived. So if the dollar does this, I want to get long. Okay. So anyway, 97.50. Oh, look at this guy talking about the dollar on CNBC. How about if I talk like that? Okay, 97.50 will be support. Nice. Okay, let's go over to the peso. I could talk like that too. You like that? How about if I talk like that? Would you guys listen in? Are you, Lynette asks, are you channeling your inner Kermit the Frog? Perhaps. All right, so peso. Here's the big deal about the peso. First of all, that flag pattern's already played out. I traded this the other day and lost money like a doofus. Whoops. But my inaugural trade on the peso, because for those of you that don't know, I just recently have been able to trade the peso. Damn it, I can't get my fingers on that blue line here. Here's the thing. Okay, so let's go over to the daily chart of the peso. So you know this is a really significant uptrend, right? Obviously that's what makes 1633 huge. So on the peso, 16, you guys, if you guys are new to this, we do this every single day, and not Kermit the Frog either. We just go through the same analysis process every single day. One thing that people know from listening to me over 12 years is they come to hear the exact same analysis. It's not like I change it up and go, oh, today we're going to look at this oscillator. Now we're going to go look at Ichimoku clouds. And I mean, yes, of course I'll look at some candlesticks, and obviously if we get an engulfing pattern, it's a big deal. Or I might look at a harmonic pattern setup because it's price and fibs matching each other, like a confluence. But really the analysis is always the same. So we just continue on what we've done today with tomorrow. So when you come back tomorrow, everything here is drawn that I drew you know, I drew this. I drew this today. I'll be drawing it. I'll be continuing drawing it tomorrow, and the lines don't change. You know, everything's fluid from one day to the next. Okay, so with the peso, we're now approaching that 38% retracement. And that 38% retracement, the reason why that's a big deal is because A, it's a 38% retracement, but B, because if this market gets some risk aversion, this is going to break out. This is when the emerging market currencies go get hit, okay? So a move above 1670 to, I think 1670 is what we've been writing. 1671 probably, but 1670, it's huge resistance. If that breaks, we go from, well, we've been range bound, but we go from range to bullish because we're going to continue into this, you know, pivot off this trend line, and then we're rallying towards the highs. Remember, if we get some risk aversion today and the dollar's strong, so let's say it's a good number, the market doesn't like it, you know, the stock market goes, ooh, pooey, I don't like it because, you know, strong number, Fed's going to raise rates sooner rather than later. Crap, I don't, you know, stocks, let's short them or let's sell them. If that happens, this peso is going higher, and I really, really want to buy the Mexican peso, or the dollar versus the Mexican peso. I really do want to be long, but I kind of need equities to be under pressure to do it, you know. But you can see technically it looks great. Norwegian krona. So we had this big cup and handle pattern. Norges Central Bank met yesterday morning. They kept rates unchanged, but they didn't talk about cutting rates. So in the face of weak crude, which that caught a lot of people off guard, because I was thinking, and I did not buy it, but I'm lucky, because if I would have thought about it, I probably would have bought the US dollar Norwegian krona. I just didn't think about it. But you know, on the breakout, I was thinking, oh, I'll buy it on a pullback, and then I just kind of forgot about it. Fortunately, I forgot about it because I was in the same thinking as everybody else here. Hey, we're breaking out. The Norges Central Bank's going to meet. They're going to be very dovish because crude oil is just persistently weak. And what happened is they left rates unchanged, but they didn't talk about, you know, future rate cuts or anything like that. So that's what put the U.S. dollar Norwegian krona under pressure. So unless the dollar just comes out of its shoes today and really starts to rally, I'd be a little careful with the Norwegian krona. I'm going to keep it off the bias chart. Swedish krona, on the other hand, as I've been saying to you this last couple weeks, as the euro bounced back, now think about this, as the euro bounced back to like 111 or wherever we were at, 110, 111, we bounced back. This US dollar Swedish krona did not pull back at all. And last week I said, man, if the euro comes under pressure, this thing's going to break out. It's breaking out. Okay, and keep in mind this US dollar Swedish krona is also in a very bullish trend. We're going to be heading into some pretty key resistance soon. I don't think chasing it at this point makes a whole lot of sense, but I sure as hell wouldn't want to be short. Let me just put it that way. Okay, it looks like it's going higher, but it's going to need some dollar strength to accompany that. All right, but I'm going to leave it as such. I'm not going to put it on the bias chart. So there's your bias chart. Let me see if I can get some of your questions really quick.